Zimbabwe cash crisis worse. Talking about Venezuela once again.
Systemic important banks. They removed the one factor called monetary awareness.
Hey there, hope all is well. Back here today with some more RTD News updates. As you can tell from today's title, why are 7 million plus Americans 90 days behind on their auto loan payments? And the answer is easily because it doesn't take much nowadays to get approved for a loan in a debt-based system that's dependent upon more people taking out loans in order to survive. So today I have two articles I want to share with you. More importantly, you can always find the information down below beneath this video. But before I dive into today's articles, as always,
Recession will be a recession.
We're going to hit a recession.
The date of the next recession.
If you have the right plan to set up, you can make a lot of money from this.
Hey there, so as I mentioned today, I have just two articles I want to share with you, but more importantly, the answer to this question comes in many forms and sizes. But yet the first thing that comes to my mind is because of subprime lending, where we have more institutions willing to extend credit to people who are not worthy of being able to take care of their bare minimum living standards, nevertheless be able to take on payments of a newer vehicle, amongst the idea that the credit score has been adjusted over the last couple of years, and probably a variety of other things. But it's a good sign that because of this current economic expansion, as the mainstream media would have us to believe, is not really what it seems to be on the surface. It's being felt by more and more people on Main Street. And so as always, feel free to find out more for yourself. Just going to skim through the articles, give you something to think about, but more importantly, share more of my thoughts at the very end. Very first article here is from CNBC, and I want to thank the RTD community member that forwarded this to me. And it says a record number of Americans are 90 days behind on their car payments. And give you an idea of some of the details of this article, it says here, more than 7 million Americans are at least 90 days behind. That's higher than the peak in 2010 as the country was still reeling from the devastating financial crisis. It says, quote, the number of distressed borrowers suggests that not all Americans have benefited from the strong labor market and warrants continued monitoring and analysis of this sector, a Fed economist says. So scroll down a little bit more, give you more details. So based upon recent data in regards to those 7 million Americans, it says that's more than 1 million higher than the peak in 2010. It says the surge in delinquencies came along with a 584 billion jump in total auto loan debt, the highest increase since the New York Fed began keeping track almost 20 years ago. So since this Great Recession, more people have taken on more debt when it just comes to cars. And we're not talking about any other sector where there'll be student loans, credit card debt. We're just talking about vehicles that usually get people from A to B and how people have chosen to go into debt in acquiring a newer vehicle. Scroll down a little bit more. It says, on the bright side, the overall level of credit quality actually improved, with those at the lower end of the spectrum declining to 22% of the total share, while 30% of the 1.27 trillion in total auto debt is now held by those on the higher end of the scale. So it looks like people who probably have a little bit more disposable income or higher paying jobs have decided to go into debt a little bit further by probably upgrading to somewhat of a more expensive line of cars. It says those numbers, quote, will suggest that the overall auto loan stock is the highest quality that we have observed since our data began in 2000. It says, however, with growth in auto loan participation, there are now more subprime auto loan borrowers than ever, and thus a larger group of borrowers at high risk of delinquency. So here we have the idea of subprime auto loans. And so we know very well what happened with the last line of subprime lending in the housing market 10 plus years ago. And so it's good to say that the subprime lending has returned in greater strength than ever, not only in the housing market, but as we can see here, but in the auto industry as well. And ultimately what that has proven is that people take on more than they can afford, which then increases the rate of delinquency because they are not able to just to make the bare payment, nevertheless pay off those type of loans, especially in the auto manufacturing industry where you have people taking out loans 5, 6, 7 years on a car that loses value every single day. And we're starting to see the side effects of that. It says debt issued by auto finance companies rather than a dealer level is responsible for most of the growth by less qualified borrowers. So we have auto financing companies, not the actual dealers themselves. We have small, independent, entrepreneurial type opportunities for people getting into the credit market, extending loans to people, preying on the innocent and financial illiterate that have no understanding of how our monetary system works, how debt works, how credit works, and they are the ones that are becoming victims of these dangerous lending practices. Next article here says auto loan delinquencies surge past Great Recession rate. And one of the things that stood out to me was it says the economy is so strong, so why are delinquencies rising? And that will lead you to believe, is the economy really that strong? I probably beg to defer. It says most auto loans taken out in 2018 to what the Fed describes as the, quote, most creditworthy individuals, or those with credit scores about 720, but borrowers with credit scores less than 620 had delinquency rates exceeding 8% in the fourth quarter of last year. So here we have a certain portion of the delinquency rates among those who have less than or at a 620 credit score. And as I mentioned earlier, over the last couple years, the credit agencies have made adjustments to make it look like people who really shouldn't be taking out loans are capable of handling higher debt loads because of some tweaks in how they grade and rate credit worthiness. Scroll down some more. It says, quote, the overall performance of auto loans have been slowly worsening despite an increasing share of prime loans in the stock. A recent bankruptcy survey finds most Americans haven't gotten a pay boost in the past year. It says October 2018's average wage had about the same purchasing power as it did 40 years ago, according to Pew Research. It says as costs like healthcare, childcare continue to increase, wages are struggling to keep up. So there you have it. What's happening in the news? We have more than 7 million Americans behind at least 90 days, and it's not going to get any better. So here we have the idea that subprime lending in the auto sector has really become a problem because it's putting people in a much tighter squeeze than they ever imagined they can be in. So it looks like every single car lot you drive past these days have some type of advertising saying instant approval, guaranteed credit, or something to lure people in. It's unfortunate that when you can walk into a dealership, probably new or used, and drive out with a car, not even being able to afford your daily necessities, nevertheless the idea of getting to a newer or used vehicle, more than likely with a payment that's well beyond what you can afford, and then to be offered something like a 6-7 year payment plan that makes the payment appear to be small, while all along putting yourself in a much deeper hole or setting yourself up for a worse debt trap. So this is what's happening in the main economy. 7+ million Americans, 90 days or more, and the number will not go down. It will only go up. And as you saw from the numbers given during this article here, that was 2018. So imagine how it might end up at the end of this year, all subject to the current economic environment we're in, as well as all the other things happening around us, factor in the government shutdown, the trade wars, you name it. So definitely, I anticipate these numbers growing even higher. So these are all things that we should keep an eye on. So once again, we'd love to hear your thoughts on this matter. Where is this heading? Will it get better or will it get worse? I'm curious to find out. Leave a comment down below. Look forward to seeing you tonight for RT Live Talk with my guest, David Modell. See you then.